Okay, good evening, Advantage members. It's Sunday, March 6th. We are very, very close to the daily and the weekly close. We're about 17 minutes off. So if we kind of look at the weekly right now, the way it's about to close, by any metric, I mean, this is not really a good close at all. Also, given the fact that we've basically kind of been consolidating like this, I would say structurally after this big drawdown, also makes me feel paranoid that in the next week or two we might have a sharp drop, or it's also possible that I don't know, maybe we just consolidate here longer because this is the strong 30K support. We might be printing a higher low, right? It's really hard to say. So I summed up my thoughts in this quick tweet thread that you guys might enjoy. One of which, one of the points that I highlighted was the European markets. If you actually look at them, whether it's the German DAX or the FTSE from the UK, right? They got completely hammered last week, and it was a really rough fall for a lot of European equities, whether you go in the French market, the German, the Dutch markets, etc. Okay. And then following that, what I want to mention is all the stuff, the crap happening with Russia and Ukraine, and whether it's the macro stuff from the Fed standpoint here in the US, you have to look for points of contagion from what exactly is happening in the Russia-Ukraine stuff. How is it first impacting Europe, which is obviously the nearest counterpart? And then how does that bleed into other parts of the world? Specifically, if you look at the Nikkei, which is from Japan, the S&P 500, which is from the US, and then the Hang Seng, which is from Hong Kong. Of course, you could look at other parts of the world too. For example, if you look at the CAC, which is the French stock market, the Shanghai Composite, which is from China, basically everywhere you look around the world, last week was the tough week, almost for everybody, okay? So where does that put us, right? Well, obviously, we know that the Russia and Ukraine stuff it's not resolving. And in fact, it's not even getting better. One could make the argument that it's getting worse. Again, I'm not keeping up that closely with it, but I know enough to recognize that it's, clearly impacting the markets in a negative way. The markets are really reeling from all the secondary impacts that are happening from the Russia-Ukraine war. The other risk is that if the Russia-Ukraine war draws in NATO, draws in the US and other parts of the world, it can get significantly worse. And then you are then full blown into potential world war. Again, I don't know that much of it, but, point is, these are all the talking points that people within the news cycle, people much smarter than myself are talking about, right? So we have to pay attention to those scenarios. So then how does that bleed into crypto, right? Which is the market that we often trade. Well, here from basically the beginning of March, as you can see, right, we had a pretty sharp uptick, okay, right at the tail end of February to the first maybe 2.5 days of March, and then a complete just wipeout of all those gains that we had on the first day or two of March, right? Here's the big sell-off right after that. So as of right now, any up move that you had in February was completely wiped out in the first 3 or 4 days of March. Okay, whether this is in BTC or any other altcoin that you pick, right? Pick your flavor. I mean, it all looks the same. Now, the problem with all this is that we are still at the beginning of the month, and anything can happen through the rest of the month. For example, Bitcoin right now, as I stated, is basically sitting in no man's land. Okay, no man's land, meaning we're not near the bottom of the support range, which is 29,000-30,000. And we've already rejected 45,000, almost like a triple top right here, right? This can be clearly seen as some form of, I don't know, a triple top. And triple tops, by the way, in Bitcoin are very, very rare, and they do not play out, meaning triple tops rarely, if ever, cause a huge collapse to the downside. But maybe this time is different, right? I cannot ignore that scenario, because in this triple top, What you also recognize is that the market overall for the last 2.5, 3 months, almost 4 months now, has been clearly breaking down with just absolutely bad news, terrible momentum. And this is not even isolated to crypto. This is like equity markets all over the US, all over the world. So you have this, massive down pressure on crypto from everything that's happening around it. And so where does that leave us today? Well, where that leaves us today is a market, in my opinion, that is far easier to press to the downside than it is to rip to the upside. Meaning, I think Elizabeth and myself were kind of discussing this in the channel right here, which was strong markets can absorb bad news and then start trending back up, meaning they could go down for a couple of days and then they start ripping back up. That's a definition of a strong market with a strong bid. A weak market is already going down, and when it absorbs bad news, it just rips down even further and it dumps worse. On top of that, when it has good news, even that is very short-lived in good markets. Now, I wrote this post on Substack about how Bitcoin is in the perfect environment to start heading up because of everything that's happening in Russia due to sanctions, the things that happened in Canada, 2 or 3 weeks back, where the trucker protest was met with frozen bank accounts and seizures of money and canceled GoFundMe's. Like, this is the environment that Bitcoin should be thriving in. And yet it is not, right? So what it's actually doing is, in fact, BTC is seen as a clear risk-on asset with the NASDAQ. And here's the correlation, by the way, for the last several months of Bitcoin and NASDAQ. And as you could see, that correlation is very, very tight. BTC is in the white and NASDAQ is in the yellow right there, okay? It is a very, very strong, almost, I think 70 to 80% correlation, which is what QCP Capital had calculated. And that just goes to show that the market right now is not looking for, your next digital gold or something that could help Russia or other parts of the world create this new form of digital currency that will help them avoid sanctions. That's not what the market is looking for right now. What the market is looking for right now is safety. Okay, safety because of the uncertainty in the environment, safety because of war, safety because of high inflation, supply chain issues, and all these, goods and services that are going up tremendously in the market. If y'all remember, I had posted this a couple of days back, where if you look at some of the global exports coming out of this area, Ukraine, Belarus, and Russia, whether it's fertilizer, whether it's wheat, barley, corn, energy prices, all this stuff has gone up tremendously, right? And this just goes to show that we are in an environment where the market is not really caring about, heavy speculative risk assets, even though crypto, in my opinion, is by far one of the most innovative asset classes. Unfortunately, we're not seeing a bid in the market. And this is the perfect time to see a bid. So either we are going to see a delayed reaction, or the market is just still reeling and digesting this bad news. And it might just take a while. It might be the fact that Bitcoin needs to go to 30K or 29 or 25 out of nowhere, right? There was another diagram that I had drawn up regarding BTC, which was, let me see here, actually. Which was the 3-month chart. Let me see if I can pull it up here. Okay, the 3-month chart, it's a very simple diagnosis of what I saw over the past few months regarding BTC, which was when you have these big bullish candles right at the top of trends, and I should have clarified this, at the top of trends. But again, we don't know if this is the top of a trend, right? For all I know, Bitcoin, in the was it Q1, Q2, right? So Q2, okay, by the time we finish this candle right here, in Q2, in June, it might just put in a massive ripper of a candle, okay? And that's possible. But as of right now, this candle and this candle is analogous to this candle for the purposes of the demonstration that I'm going to put on, which is when you have this 3-month bullish candle right into the top of an uptrend, what happens? Well, several months after, maybe even a year or two after, you have basically a prolonged downtrend that takes out the low of this big bullish candle for the 3-month chart. Same thing right here, big bullish move, takes about 9 months or so for us to take out that low, okay? So what you now have is two separate occasions where you see this and this right here, the low being taken out twice. Now, two pieces are really not a good data set, right? I understand that, but I'm just giving you guys an example that if you look at this current candle right here, guess what? We have not taken out the low of this candle. And the low of that candle right there is $27,650. So invariably, we are going to take out at some point, based on the preceding two sessions, right, of these 3-month candles, we're going to take out 30,000 to be able to take out this $27,000. Now, again, this is just a pure speculation on my part, right? I have no clue how true this is because my sample set is just 1 and 2. But I'm pointing this out because there are other metrics that I've been watching that I've told y'all before about, which is if you look at Bitcoin on a monthly standpoint based on two very simple indicators. Number one, the MACD. Number two is the CBIDX, which is basically a slightly more better formula of the RSI. In both these occasions, in the bull market, all the way run up into 2013 and drawdown into 2015, and the bull market up into 2017 and the drawdown into 2019, in both occasions, the MACD, once it gives you this bear cross with these purple crosses right here, as you can see, the purple lines, it has led to a several month prolonged downtrend. And that has only been bottomed with the 40-point level, which as per the CBIDX is basically an oversold territory on the monthly chart, which Bitcoin, by the way, has yet to reach right now, right? So you can see based on our 3-month analysis, based on this monthly chart with these two indicators, you could see that there might be a reason why we may need to consider that there may be a prolonged downtrend. And even if it's not a prolonged downtrend, I'm not saying that we have to go back to 10,000 or 5,000 or 20,000. I'm just saying that for all I know, right, we might just chop here sideways and keep grinding down. Maybe we grind down from 38,000 today to 35 or 33 or 32 in the next, 1 to 2 months, right? Maybe that's all Bitcoin does, okay? But the point is the grinding down, in my opinion, is far more of a likelihood than, just ripping up from here. Now, because I've shared my, bearish thesis, okay, I don't want y'all to think that I'm just a perma bear. I'm going to give y'all the bullish thesis on this too, which in my opinion, I think is very contrarian, and it's kind of like a big middle finger to both sides. And something like this, okay? I did this on my Twitter just yesterday, just because I was kind of having fun with the chart. And I was asking myself, like, we're in such a heavy fear-based environment with prices that are, clearly depressed prices, right? So in a situation like this, what is a scenario that could not be anticipated by most people? Well, I could see something that is, again, goes along with our monthly and 3-month time frame, which is a prolonged downtrend. But in the near term, we could have so much noise and so much volatility of up and down like this, where you might basically trap both sides into thinking we're starting a new bull market. Today, maybe people have the opinion that we're starting a massive downtrend and we're just going to nuke down straight to 30K. And maybe both sides get destroyed by that. And that could happen in a situation where it's something like this. Excuse my Pepe meme right here, but this is honestly how I felt. I was like, what is the biggest middle finger scenario that could happen? Well, we could head down towards 36 or 37,000. We reclaim that level. Why do I say that level? Okay, because that's the last little low that we put in, the last low before this massive up candle. So this is the last place where buyers stepped up to the plate and they said, okay, sellers, you're done. It's my time to take over, right? And boom, that led to this big move in the market. So that means that if we are able to go back to that low and we sweep all that liquidity, can the buyers defend this low and rip this back up again? Okay, back up to maybe the yearly open, which is a completely, visible target almost on everybody's radar, right? And that could be a scenario where almost everybody starts getting bullish again, right into resistance, right into a key yearly open, pivot. But then from there, maybe the market doesn't have enough oomph in it to break out and just starts rolling over. And that's where we start, a big leg down towards 30K, 29, 26K, whatever. Okay. Is that pretty clear so far? Okay, Joe has a question, and this is the example. You have the double top where we didn't have that before. Is that a factor? Oh, you're talking about this multi double top. Yeah, I don't really believe in these big double tops. Like if I were to look at this double top, then the argument is like, okay, well, Bitcoin is like going to 2000 or zero. And then that's, again, I think that's kind of dumb. I mean, I don't really want to entertain that scenario because like, what's the point? If we're going to entertain Bitcoin going to zero, then what the hell are we doing here? Right? If we're betting on the innovation of the space and you believe that crypto is something unique and innovative that you want to see cultivate and grow into the future, then you invariably want the asset class to do better in a longer period of time. Near term, of course, volatility and the macro conditions and the war and all that talk is going to probably bring it down. Like you don't have to be delusional and say, well, Bitcoin and crypto is going to completely ignore all the war stuff and all the asset inflation and inflation in prices and all that stuff. And it's just going to rip up. Like that would not be a fair argument, right? So near term, we stay on a bearish bias and we keep the market in mind with the fact that we want to stay bullish long term, but near term, it's going to suck. You want to hang on to some cash position, whatever your portfolio looks like. I think you want to have some cash on the side. If you're completely exposed to the long side, I think you should start thinking of options where you might want to de-risk. Again, not investment advice, but I think it might be time for you to start thinking that. Or if you start seeing the market, I don't know, rip up to the yearly open, if it does, that might be the time to start de-risking. If the market starts nuking from here, I don't know, maybe you can start putting on short hedges. I guess that's probably one of the only options. But keep those short hedges in mind that, Bitcoin and most of these cryptos, right? Excuse me, they're very aggressively oversold, but altcoins can definitely head down lower, right? Bitcoin can rip up, I don't know, 10, 15% from here today, head to the yearly open. It might drag up altcoins with it another 10, 15%, but altcoins are already down 60, 70, 80, 90% from the highs. So these altcoins ripping up 10, 15% are not really a sign to buy. They're probably going to be exit opportunities for you. So you have to keep in mind, like, okay, whatever altcoin that you're in, are you getting a pretty decent exit? And if not, do you get to get out of a little bit of your position? And then if the altcoin rips up, do you then short and hedge on the way back down? Right? These are the decisions that you need to start thinking of. Okay. You guys know very well, in the 5K count, I've held a majority cash position over the last several weeks. We've been shorting, we've been doing decent with it, but I'm not looking to, get rich off this market right now, because in my opinion, it's going to be just a very choppy market. And I'm not going to do well in a choppy, uncertain market that every single day has some bad news coming out with Russia and Ukraine. And then that brings the market up or brings the market down, right? Your positions get blown out in the matter of hours. And I don't want to trade that market unless I start seeing that, okay, these are key levels of support that a market is coming into as a whole, and that might be the opportunity where I want to buy, right? Or these are key levels of resistance where I may want to short. Okay, let me see. Elizabeth says, have you checked the OI for a blow off top coming? So yeah, we have talked about this a little while back. So if you actually look at global charts right here on Coinalyze, and we've done this before, so I go to the yearly and I compared last April's OI to the November OI. So if you actually look at the quote unquote blow off top that we had in April and May back here, so that open interest reached about 45.9 billion. So let's just say 46 billion. It dropped all the way to a low of about 17 billion. Okay, so that's more than a 50% drop in open interest. And again, for those of you who don't know, open interest is nothing but a measurement of the futures contracts, right? Which are, again, derivative contracts, not spot. They're a measurement of futures contracts that are opening up for crypto as a whole. I don't think this is just Bitcoin. I think this is probably all of crypto. So how much actual leverage is in there in the system? So in November, the high for open interest was close to about $54 billion. As of today, it's at 26 billion. So that's close to about 50% drop, right? Now, the problem with open interest is that, first of all, it could definitely go down further. So for those people that talk about there's not a lot of leverage in the system, that's not entirely true. There's a lot of leverage in the system, and that leverage can still be wiped out. But the bulk of the argument that people have is that, well, there's not that much leverage as it used to be, and who's going to sell spot? Many people will sell spot, right? Many funds, many institutions will get your asset on margin and short those assets on the way down. Why? Because they know that Bitcoin and crypto is a high beta speculative asset class. And if they want to get exposure to crypto going down, what do? They can short with basically nothing. You can either have the inverse perp contract, which is you don't have to have the spot position to short assets, or they will go out, buy some of the margin spot. Okay, they'll buy millions of shares of Polkadot or Cardano or all this random crap, and they'll start selling it and start capitalizing on short positions on the way down. Okay, and then they will ultimately close out some of their spot positions at just incredible lows. This is how shorting works in the stock market too, right? In the stock market, you don't get to be short unless you're borrowing the actual asset. If you want to be short Apple, you have to have Apple, the asset, to be able to short, right? Well, in this particular instance, it's going to be the same for a lot of these big investors. They can just go out, start picking up these assets on margin, and they can start shorting and selling them in the market. So the argument of, well, who's going to sell spot? Trust me, there's a lot of people out there who would be willing to sell spot if they see that the market has another 20, 40, 50% decline. Because at the end of the day, they have investors that they need to go back to and show them quarterly statements, yearly statements, their performance of how they performed, through the last several months, right? So these funds, remember, they have a far longer duration, and they don't want to risk, their near-term P&L just because they think that 4 or 5 years from now, crypto has to go up. So near term, they need to protect the volatility. They need to protect the downside risk. Okay. That was a long rant, but I just want to get that off my chest because I know everybody's kind of thinking like, hey, we're going to be in a heavy bear market and we're going to head down lower and lower. I don't know. I mean, yeah, that might be true, but like, I think that the market is not going to be a straight down only mode. I think there's just going to be so much chop. And in my opinion, I think our community is going to navigate this chop very, very well. Why? Because as of right now, over the last several months, we have not had a bias that we've aggressively stuck to. We've been trading in and out of the positions pretty well, never taking too big of a loss. And that's what it takes to be successful in this environment. You just have to be nimble and flexible with your bias and your positioning, and you will do well through the rest of the year. And when the market does come back with strong assets being bid up, we will be ready for it. Okay, whether it's 2 weeks from now, 2 months from now, or 8 months from now, whenever, right? For now, we just trade the chop. We just trade whatever momentum that we can get, and that's it. Cool. So I think that's really all I have when it comes to BTC. Like I said, levels wise, I'm watching some key levels on the downside. I'm watching this $37,000 level right here, which would effectively negate this entire up movement that we had. And if that's the case, right, if we do break this and then we recover, I think that might be a potential longing opportunity right here to take this trade right back into the yearly open. That might be the biggest surprise that most people have of the market ripping up. Okay. Assets other than Bitcoin at the top of my list, I still have AVAX at the top of my list. I think AVAX is now building subnets, which I'm super, super excited about. I want to show you all this. This thing, I mean, what they're effectively going to do is be able to kind of distribute traffic, distribute the movement of assets into different ecosystems within AVAX. I think it's one of the more unique ways. One of the L1s like AVAX is going about, this environment and how they're actually like growing and developing. Most of the other ecosystems, like I think what I've seen, over the last several weeks, I want to say, is just many of these L1 ecosystems are really, really finding it hard to create anything new. So it's either NFT cash grabs, which people are still, using, which I think NFTs are probably going to get whacked. I think GameFi, play to earn gains are going to get whacked over the next few months. It's going to have, a choppy up and down movement, but I think it's going to be tough to trade in that environment. But, when it comes to the NFT space, what I often see, whether it's in the Near ecosystem or Solana or Ethereum or Cardano, it just seems like everybody's just trying to create as much, mintable art as possible. And the only real winners in that situation are the artists, right? Because everyone who mints, you're really hoping that someone else is going to pay for that art or pay for that mint more than you. And as of right now, what we see is, overall depressed volumes and depressed interest and activity in these ecosystems. That is undoubtedly true and factually true, right? So when you see volumes are going down, user activity is going down, people are not as inclined to start minting NFTs. And if they are, well, a lot of them may not actually get you, a high profit, right? Unless you get some of the rare ones. Okay. So you inevitably have to sell at a 50% loss as soon as you mint, more often than not. And by the way, I've done those mistakes, right? Many of us have gone through those mistakes. I'm just letting you guys know, those of you who are in the NFT side, just be careful, because the NFT environment right now is not as easy as it was 3 months ago or 6 months ago. Okay. Other aspects of the market, let me see here. Let me see. What else do I want to talk about? Talk about that. Oh, there was okay. So aside from NFTs, I wanted to talk about the other, yield farming and staking opportunities, right? That once again, when the market is really like chopping about and it's trying to figure out like what kind of like interest do we have in crypto? What kind of people are bringing in, money in hopes of getting more money. And that comes with, these yield farming strategies, right? So over the last several months, one thing I've noticed is a lot of these farms, a lot of these, staking opportunities, farming opportunities, right? The liquidity pooling opportunities, what they've effectively done is they've created almost like a honeypot, if you will, where almost everyone gets attracted because of the high APRs, but almost everyone in it gets destroyed, because what happens is you're excited about the high APRs, but then the tokens that you're getting paid out in are going down significantly in value, right? As soon as you enter your money into that farm or into that pool. And then not only did the token values go down, but the APRs, if they were, 500 or 1,000%, they literally drop overnight from 1,000% to 200%. And then again, a week goes by, they go from 200% to 50%. So you're getting screwed on both ends. And here's a perfect example of what happened with, Solidly, right? If y'all remember a few days back, I had talked about it and I said, hey, maybe we should do some research in it. Thank God I didn't put any damn money in this, because the token Solidly, which is on the FTM ecosystem, dropped 95% in 8 days. Okay. And FTM itself dropped negative 32%. Now, this could be because Andre, who is the developer and someone who is helping Phantom and who's helping the Wi-Fi network, they have basically decided to quit, right? They're leaving the crypto space, supposedly. Maybe that could be part of the reason, right? But what I've noticed is whether it's Solidly, whether it's these other ecosystems, they're offering these high APRs. So you park your money in the greed of getting, more tokens or high APRs. But then what happens inevitably is that those token values go down, the APRs go down, and you're basically stuck, holding a bag that's down 25, 30, 50% within a matter of days. So be careful in this environment, because remember, when the market gets into this like very sort of bearish mode, everybody starts moving, down on the risk spectrum, meaning that almost everybody's trying to figure out money that they can make in a relatively easy way with significant multiples really, really fast. And that's either NFTs or these passive income trading, strategies, right? And that makes the environment even tougher, because then you lose more money because you're trying to go for these easy lotto tickets. And it just creates this compounding effect of, constantly just losing money in one trader or another. So what I want Advantage members to do is just be very careful in this market, stay patient, right? As I've told y'all before, I think we are going to navigate 2022 very, very well. And I fully believe in that, because I feel like I'm not looking into the future or anything, but I feel like what I'm paying attention to in terms of 3 months, 6 months, 1 year out for the market is things that most people do not want to pay attention to, because they don't have the patience, nor do they have like the mental time span to look that far ahead or trade with that in mind. And I think our community is going to do that really well, because we know that 2020 and 2021 was a great year, and we expect 2022 to be very choppy. And those people that are in the up only mode, okay, yeah, they may be right, 6 months, 1 year, 2 years from now. But if you are in the up only mode now and you start longing heavily and you start staying, spot long heavily with the hopes of us starting a new bull market, all through this war situation, all through the crisis of, these, resources and consumer goods, everything that the world is facing, you have to really think, what exactly is happening in the world and how am I reacting to it properly? Okay. And if people are not thinking through those things, in a methodical way, those are the people that are ultimately going to be forced sellers in a capitulation event, whether it's next week or next month or a couple of months from now. And I truly believe at some point that event will come, whether it's in a slow bleed all the way down or it's just a sharp movement. But for now, we stay with the chop. We enjoy the chop. We trade wherever we can in the midst of the movement, and that's it. All right, that's all I have for my rant. Is there anything else y'all want me to cover? Anything specific? Okay, looks like no. So thank you so much for watching, and hope you found that video helpful. All right, y'all take care. Good luck. I will catch you for a live session at the New York Open tomorrow morning. All right, take care, everybody. Good luck. Cheers.